My name is Lunta Di La Paulu. I'm the managing director of Yeto Accounting and Tax PLLC. And we have today a very important subject that we want to share with you. If you are a business owner who is over 50 years of age, this is the type of webinar that you don't want to miss, because we're going to be talking is exactly about what you need to do to begin preparing for your exit. And when I say exit, we're about whether you plan to sell the business or whether or not. My father tell me, uh, but because is a year that a little bit closer towards the end of my life. Not that he wanted to sound gloomy or dooming, but it's the reality of life. And for us business owners, it's exactly the same thing. We start our business, although I'm still, at the, you know, I'm still climbing, figuratively the mountain of life. But, exiting the business, we always tell our clients, existing and prospects, that it's the reality of life, right? If we're not prepared for the next stages or phases of our lives, when we know that one day we're gonna have to exit the business, it's inevitable, it's unavoidable, it's guaranteed that at some point you and I will have to leave the companies we've run, right? So the question is not if we're gonna exit, but it's when we're gonna exit. And that when, it's very important, because if that when happens and the business is not ready, or we are not ready, or a major illness, comes to our lives, or, a family situation, or any life circumstance, or even just you're near retirement, right? You have to be in a position where you really understand what's at stake and how to navigate this process. But unfortunately, many business owners unfortunately lose significant value because they never prepare themselves or the business for their transitioning out. And as a result of that, it's really the reason that we see often in the marketplace businesses that never get sold for months, if not years. And the statistics that we have is that only 1 out of 13 businesses ever get sold. And from these 1 out of 13, right, we know today that only 20% of these business owners who actually manage to get the business sold get to achieve the results that they wanted to achieve when they exited, right? And what we also know about transferring the business to a family member, okay, only 45% of the transition actually make it to the second generation, and a little over 15% make it to the third generation. So if you are really serious about preserving what you build in your family or trying to sell it, you really need to understand what's at stake and how to position yourself and the business for that transition. So what I'm gonna share with us now, it's a framework that we have created to help business owners navigate this process. But we begin, our analysis by looking at the most important thing. What are you looking to achieve once you exit, right? What's your timeline? We're gonna look into some of these questions just in a bit, but we want to get a better sense of, okay, what are you trying to leave after you exit the business? What is your life going to look like once you exit the company? Okay, whether you wanted it or not, what is your life going to look like after retirement? And we like to quantify the financial side. So the first thing we want to get is, okay, if I want to sell the business, what is my living expense going to look like if I'm no longer running the business, if the business is no longer paying for me, right? So we break this down into what are my needs and what are my nice to haves or luxury expenses, right? So per month, we're saying, okay, we're gonna be spending about $5,430. Okay, times 12 months, that gives us about 65K. Okay, adding the 22% taxes just for prevention, right? We're looking at 79K. Okay, if I'm expecting to live about 30 years after I exit the business or retire, right? I really should be looking at $2.3 million, right? That I need my business to be valued at. Okay. I also would love to have a net worth of about, this is just an example, right, of about 1.2 million, and I'd love to gift about half a million. So when we sum all these three elements, right, we're saying that you really need to be able to create about $4.1 million, right, for you to achieve this goal. Okay, so but that's not all that we need to figure out. Okay, that's your living expense. So when we actually begin factoring some of the other pieces that goes into making up the cost of you exiting your business or retiring, right, this is really the number that we're targeting, right, your equity value. Okay, so your target equity value, we're looking at it. It's not really the 4.1 million that we put here. It's supposed to be, right. In reality, you're actually looking at 4.3 million. And how do we get that? How do we get there? By looking into, okay, what's your net worth outside of the business? What do you have? What do you currently have? Maybe retirement, your house, other investments. Let's say you have about half a million, which is close to the average retirement account in the US for folks over 55 years of age. If you own 100%, you should expect, about 33% of your selling price to go into taxes, right? Deal fees range between 5 to 10%. So we put there about 3%. And your basis in the business is about 425, right? If you don't know what's the basis, right? It's your equity, right? Your book value in the business. So the estimated taxes is about 1 million, and the deal fees are going to be around 250K. The sum of all these different pieces is what your target equity actually is supposed to be. But that's what we're targeting in terms of your equity. But let's look into, okay, what is your business actually look like? So let's say, for example, you are a construction business owner and your EBITDA, right, your seller discretionary earnings, okay, is between 0 and 999K. Okay, you're below $1 million. Okay, so what happens then, right? The average multiple in this industry is about 4, and we have your financial data here for 2024 and then 2025. So your valuation range is between 3 to 3.3 million dollar, right? If we reduce the debt you carry in the book, right, your current equity balance is actually between 2.7 to 3%. Okay, so if we say, okay, what is actually necessary for you to grow your business to the expected after you exit, right? How much you need to grow the business every year to achieve those 4.3 million, right? That's you'd need to grow it by at least 9.7% if you plan to exit in 5 years. Now we can put these two elements together, right? So your current equity value 2.7 and your target equity value. So we have about $1 million if some change is there in equity gap. Okay, so this kind of analysis is really designed to help us understand where you are in comparison to the lifestyle you desire to achieve, right, as a business owner once you exit. So this is the first part of the analysis, a little bit quantitative. And after we're done with that, we help you run a qualitative analysis. And in that qualitative analysis, we go through your personal readiness, right? We ask you questions around, you know, you personally, whether or not you're ready, and it gives us a given punctuation. And then we assess the business readiness. We explore the different layers of your business to make sure that it's ready. And what we have here is an example that we see repeating time and time again of many business owners and how they perform. But that's not only the part of the transaction. We're not only assessing you as the business and the company, we're also trying to figure out whether or not you are ready to go through that process of trying to get your business sold or transferred to the next generation. And the vast majority of business owners we speak, we meet with, they are not absolutely nowhere close to being ready. So most of them score 0 out of 6 of these questions. So we put all of these in a summary table, and this is the summary table that we produce to business owner and we send to them, right? Their age plus the 5 years they're planning to exit, right? And then we put alongside their equity, their current equity value and the target equity value. We show them the difference and then the score they got in different section, right? And that gives us, you know, the overall, right, and the overall score here, right? A, B, C, D, E. And most business owners, sadly, are still scoring between D and E. You know, every here and there we see a C score. Rarely, if ever, we've seen any B or any A since we begin running these analysis. So what I'm gonna do now is to invite you on an extended invitation. If you are, as we started at the beginning of this presentation, if you're a business owner over 50 years of age, right, and you're starting to think about your exit, you're starting to think about what's next in your life, right, we invite you to sit with us, with our team, to see how your business stack up in these analysis and how you can use this report to improve your preparation so that once you exit, you can actually achieve the price you want, the terms you want, and the timelines that you desire. That's the recipe that we believe is critical, that is valuable if you are going to exit from your business and get the best outcomes with that exit. Okay, so I'm gonna pause here. It was an enormous pleasure to be here to share with you this information. Again, if you wanna book a call with us, would love to sit with you to share with you how this applies to you, and have an amazing rest of your day.